Just when you thought it would never end, we have finally reached referendum day in the UK. By midnight in New York, we'll have a strong sense of whether the British public has voted to remain part of the EU or once again become an island nation. Given the neck-and-neck nature of the polls, volatility has increased and safe haven plays have been all the rage. Meanwhile, bookmakers have increased the chances of the country staying in the EU, particularly in the wake of the murder of British MP Joe Cox. Investors' most keenly watched barometer, as polling results roll in, will be the value of the British pound versus both the dollar and the single European currency. In the event of a vote to remain part of the EU, here are 4 trades some investors may be watching during Friday's session. Gold futures, the classic safe haven trade. The price per ounce of gold has surged since January from $1,050 to over $1,300 last week. In part, some of its rise has been due to dollar weakness or growing concern over the global economy, but fixation with the close nature of British polls saw the precious metal jump. Gold could easily lose friends if the bookmakers are right. VIX futures, the cost of insuring stocks using options across the S&P 500 index, has remained around 20 as the polls and uncertainty ahead of the referendum create fear over a possible market plunge in the event of a vote to leave. If the vote goes the way the bookmakers assume, the cost of portfolio insurance may decline sharply. The Japanese yen, the most insular of currencies. Currency speculators have persistently driven up the value of the yen this year. Some investors fear that both euro and pound will slump on a breakup of the EU, while the dollar has been wrestling with a slower pace of monetary tightening at the Federal Reserve. The relief of a Remain vote could cause the unwind of defensive plays into the low-yielding Japanese unit. German bond futures. The rush into the safety of government debt reached new levels during the referendum campaign. The latest wave triggered the first ever negative reading for 10-year German bond yields on record. The relief of a vote to stay part of the Union could easily cause long bond positions to search for a better yielding alternative. That's all from Traders Insight for now. For more market colour from our contributors, visit us on the web at ibkr.com/ti.